Hi, Darin Mangum here, securities attorney. I am super excited to give you this video today, talking about some recent developments in the securities industry. Um, in many of my past videos, we've talked about offerings for accredited investors, non-accredited investors. How do you go about it legally, raising capital? And a lot of clients, they want to, obviously you can always go after accredited investors, but many clients, they want the freedom to go after non-accredited investors, and because they want, ideally, people want the ability to have any investor that expresses an interest to invest in them. That just kind of makes common sense. Certainly, the securities laws are there to protect investors um, from unscrupulous actors, but oftentimes, even good guys get tripped up and get in trouble. So certainly, super and critical to do it right. But what I'd like to talk about today is what is being referred to in the industry as a side-by-side offering. What does that mean? Or a concurrent offering, to have two different offerings being offered at the same time. Oftentimes when you're raising capital, you're just thinking in terms of, okay, I'm going to do one offering of securities to investors, and typically, if you talk to a securities attorney, they're going to ask you, okay, well, are you going to market? Are you going to market it publicly to the public, or are you going to keep it private and just offer it to accredited investors, or keep it private? And so that oftentimes dictates, okay, what kinds of exemptions you can qualify for, how do we structure the offering, so on and so forth. And which is super important, because you don't want if you have two offerings that are very similar in time, I think I've talked about in other videos, we've talked about integration of the offerings. You definitely don't want like a private offering and a public offering to be somehow integrated together from the SEC's point of view, because if they're integrated, then you blow both exemptions, right? So you don't want that. But the side-by-side concept, many clients have the idea, well, when I qualify for an exemption, when I file under Form D, that somehow that exemption is tied to the company itself, and that's not really the case. It's a transaction-based exemption, and that means the transaction itself, how you're conducting the transaction, is what the exemption applies to, not the company itself. It's not like, oh, I'm a 506B fund, or I'm a 506C company. No, it's not the company, it's the transaction. And so the good news is that if you're offering a public, if you're planning to offer to the public, usually you think of Regulation A, you think of 506C. 506C enables you to publicly advertise your offering to investors, but only to accredited investors, and you have to go through all the steps to verify them. But non-accredited investors cannot participate in a 506C. Non-accredited investors are not allowed. What they can, however, invest in is like I've talked about before, they can invest in a crowdfunding round. Regulation crowdfunding allows you to raise a little over $1 million from the public through regulation crowdfunding, and those can be non-accredited investors. The side-by-side concept is to offer both offerings at the same time, 506C to verified accredited investors, and then regulation crowdfunding to non-accredited investors. Obviously, you can't mix the two. You can't have cross-pollination. You've got to have Chinese walls between them. Obviously, a regulation crowdfunding, you've got to obviously have that go through a portal, a registered portal that's registered with the SEC. And we've developed several relationships with portals that will list not only your regulation crowdfunding for non-accredited investors, but also your offering to accredited investors under 506C. And so again, these exemptions apply to the transactions themselves. And obviously, you have to provide full disclosure. Obviously, you have to do it right, go through the same system. But we're really excited about doing a lot more of these because again, it gives you that ultimate freedom to, hey, you know what? If you're accredited, come on in through our 506C offering, and here's how you do that. Here's the paperwork. Here's everything for that. Oh, you're not accredited? Oh, okay. Well, guess what? We're listed on this portal, registered portal with the SEC. You could invest with us. Obviously, we can only take in $1 million. 506C has no limit. You can, let's say you need to raise $10 million. Well, guess what? Raise 9 from your accredited group and that million from the non-accredited group. I mean, if you want to. I mean, some clients, they say, oh, we just don't want to mess with non-accredited people. And that's fine too. But obviously, non-accredited investors represent a huge segment of the investing population. And I mean, as a practical matter, it's unfortunate that, okay, only accredited investors get to see the great, the good, pre-IPO deals or the the private deals. They're the only group that gets to participate in those. So I've been a big fan of regulation crowdfunding for a long time. And so, but obviously, we would love to help you if this sort of side-by-side concept, concurrent offerings appeals to you. If you'd like to explore that to see if it's a good fit, it does cost a little more because obviously you're not just doing a singular offering. We have to engage the portal as well, but we've got great relationships with them and can pretty reasonable cost to give you kind of a one package solution, which enables us to help you get both offerings launched at the same time. And so that's why we're super excited about it, because I think it's a true American solution, right? Because now, okay, look, anybody can invest. Obviously, we have to follow the rules, but that's easy to do, So especially when you're engaging a seasoned securities attorney, law firm, hopefully you hire us to do it. But anyway, just wanted to let you know about that. And again, we would love to tell you more about how that might fit for your capital raising needs. And so anyway, thank you for watching. Again, hopefully this content is helpful. If we can help you in any way, my contact information is below. And feel free to like us, subscribe to us, share us if you would. And anyway, hopefully this is helpful, and we'll see you on the next video.